Hello everyone, this is Peter Vivas.
And this is Eliu.
And you're listening to Pineapple Chunks with today's topics being millennials being stressed out over how much wealth they've created and not knowing what to do with it.
We're also going to touch up on the Daymak Spiritus new car. They are a Tesla competitor, and their new electric vehicle can now mine cryptocurrencies.
In addition to electric cars, we're going to be talking about Michael Burry's short on Tesla and why it actually makes some sense.
And then we're going to touch up on the oil industry and how they're dealing with this all-green movement that is happening globally, mainly in the US.
And then also, as a bonus, how China is allowing, instead of 2 kids per couple, 3. So let's get right into it. So first things first, this is the anniversary for David Guetta, you know, with his very popular and very prominent on our show.
Shout out to his family.
After George Floyd's unfortunate death, he gave a shout out to his family. You know, the video was about him saying how we're dealing with so many problems, and here comes David Guetta bringing America together.
And he
Shout out to his family.
he dropped the bass pretty well after Martin Luther King sample. So
Martin Luther King said, "I have a dream."
It's a pretty good set. You guys should look it up on YouTube. It's pretty funny.
Definitely worth checking out. But, you know, after this crazy year of crypto investing, 2020 stock market, we have a ton of millennials who aren't necessarily bag holders. There are some who have actually made some money. And, you know, there are some who did lose a ton and aren't going to invest again or have just become long-term investors. But this is...
I want to clarify. They became long-term investors because they are at such a loss that it doesn't make sense to sell. It just makes more sense to wait until the price comes back up.
Right. Or they've just completely sold out and lost their marbles. So I'm going to pull up an article here by the Wall Street Journal that I absolutely loved. The cover art, you know, it's Benjamin Franklin with his hand over his face, very contemplative. You have a young dude over here thinking, another lady here just completely in the fetal position. You know, there are coins here. So it's really beautiful. A pug, you know, because 2020 made almost everybody get dogs. So, but after NASDAQ and Bitcoin rallies, young investors weigh options for what to do with their money. And now many young investors who have made more than 15 times, 20 times their money are wondering what to do. I mean, Elliot at one point was wondering what to do. And he's probably, but he knows now. I think he's definitely figured. What did you decide actually with your
Decided
gains?
I'm gonna put a down payment on a house.
Oh yes, we're buying real estate. We should definitely do an episode on the whole process.
Yeah,
we need to do that.
It's seeming like it's getting close. It's looking very good.
Right. We started a fund to buy real estate, and you know, we're not as stressed because we know what we're gonna do. We made enough to basically buy real estate and not have to deal with the market volatility and sleepless nights. But other millennials don't know what the hell they're doing. And so, you know, there are some crypto investors who put more than $10,000 in Bitcoin at the end of 2019 and have netted more than $50,000 in gains after Bitcoin's 2020-2021 surge.
And there are some people that put all their stimulus checks into Dogecoin and are now swimming in a bunch of money.
And here is an example of Arun Gupta, a 36-year-old tech executive based in New York City, began investing in cryptocurrency, mostly Bitcoin, and recently Ethereum. Good for him. It did have an uproar. Now it's not necessarily at its highs, but still pretty good. In late 2019, you're still winning from late 2019, I have to say. By the end of 2020, that original investment more than quintupled. Now, for those of you who don't know what quintupled, because I honestly don't know, I think that's 5 times.
That's 5.
That's 5 parts of things. So he basically 5x his money. Pretty impressive. And especially for not trading. And he says, I want to have enough money where if my family wants to splurge on vacation, there isn't anything holding us back. He said, I don't want student debt to be an issue for my kids or for anyone in my family. Pretty aspirational stuff right there. And no, that was not the one I was trying to say because he still has the money. But that ka-ching right there is definitely very aspirational. So,
and shout out to his family and his kids.
Shout out to his family because and to his long-term perspective on life. You know, there are so few individuals who even have this perspective and are really gambling it away. And this is the big concern. And there's some people who are just like, I'm going to ride it out. I'm going to just keep holding these more than $40,000 gains, $100,000 gains in the market. And, you know, this is a life-changing amount of money if you're only making $50,000 to $60,000 a year. And mind you, the median salary here in Miami, at least, is around $45,000 a year. So if you come up on $100,000 gains, that's 2 years of work that you pretty much just earned by your capital, not necessarily doing much. But he chats about his crypto investments in a group message with other friends interested in Bitcoin to shore up his funds for those future goals, just like LU has with the meme coins and also the altcoins that have a really good advantage in becoming the next big player, like Cardano, for example. But Mr. Gupta is planning to hold on to these Bitcoin investments and hope they continue to grow. And he says, I just know having money sitting around in a bank account, that's not my nature. He said, I like to take risks with my money. What do you have to say about that, Eliu?
I think that is great thinking. Why would you have your money sitting in, or your fiat sitting in your bank account doing absolutely nothing, or having it in a savings account accruing 1%, annual return? That's really nothing. There's so many opportunities out there now, and with the vast amount of technology that is out there to help us invest in other asset classes like crypto, stocks, real estate. Why wouldn't you put your money to work for you? And there are so many opportunities out there that there's a span of risk that you're able to choose from. You can do low risk like real estate, or you can do high risk like cryptocurrency or option calls and puts. So yeah, and with inflation coming, in the horizon, you're going to want to put your money to work.
Now, granted, Eliu's perspective is very biased because he is a big believer in the cryptocurrency world, and whether it rises or falls, he doesn't necessarily have any kind of opinion. It doesn't affect him. He does not very stress. He's dealing with his feelings, in a sense, because, well, he is diversified now. With also, I am diversified as well. We like I said, we have a fund, and we're purchasing real estate, and we have stocks and crypto. So, if crypto doesn't do well, LU and I mean, we could wait another. I mean, you could wait another 5, 6, 8 years.
I can wait till the next Bitcoin halving, and I'll be fine.
Until it rises up again. Here's another 8 years that we'll have to wait, or maybe it's not that long. But that's because you do have the diversification. There's the cash flow from either employment or rental income, and other side hustles that we do, say for selling diamond hand shirts on our site and other sites. So nonetheless, I think for anybody who's new to dealing with money, it could be quite challenging to wrap your head around the capability that you have for, say, a $40,000 in cash, right?
Right.
Or $50,000 initially, with initial investment of $10,000.
Or it could be, not obvious to spend $1,000 on a new iPhone or $1,000 on Apple stock and make more money throughout the years with the Apple stock investment, and then cash out 2-3 years later, buy yourself an iPhone, and now you have more money to spend, and you've beat inflation. So it's just a matter of how much you want to wait, your patience level, and how much risk you want to take.
And ultimately, like, setting aside money for taxes.
Right. Yeah.
So that is important.
Yeah.
if you do, I mean, there are some incentive programs that Biden is putting into real estate. I'm a big believer. If you've made more than $50,000 in the stock market, buy real estate. And, you could find ways with your accountant to offset those taxes, because there are tax incentives to buying real estate right now and in the near future as well. These are called 1041 exchanges. They're about to be limited to 500,000, but not yet. It hasn't happened yet. So if you have $50,000 in cash, that's a 10% down payment on a $500,000 home. I'm just like waiting. I'm pausing just to see if I messed up that math. No, I didn't. I didn't mess up that math, right?
I think that was sound math.
That was sound math. Yeah, not super talented in that, but still, even the realization of having to do that, that's pretty overwhelming. And then not understanding what you can do with that and how much it can grow over the period of time. And we talked about it last time in an episode, how, $50,000 investment in real estate with a modest 3% growth over, I believe, 6 years was upwards of 300 to 500% returns.
Yeah.
As far as your initial investment.
Which is really difficult to do on the stock market, for example,
right.
Unless you're an amazing investor or you have some sort of insider information.
Or margin, if you have margin.
Or margin.
If you have margin. But that
again,
charges you 9% interest.
And you're also dealing with a higher level of risk.
Right, yeah. And then, the brokerage can force you to sell if your stocks aren't doing well. So if you bought a bunch of Nikola with margin, 50, like 1-to-1, and Nikola goes down, you basically, the brokerage will sell for you. Now, if you buy real estate with 10% down, you're leveraging 90% of the bank's money. So 490,000 or whatever, or what it was, 450,000.
Now you're playing with debt.
They're not going to force you to sell if the market dips 50% in the real estate market, because you own the property and you're making monthly payments and you're good. That's just not how it works. They're not going to just, even if they unless you're just not making payments, they'll foreclose on you. But just because the value goes down, you have more safety, and you also have a roof over your head.
Dude, and if, the shit does hit the fan, you could always move in with your parents if you have that privilege, or you just sell the house.
Or you sell the house. Well, but not at a 50% down. Well, I mean, ideally, like if it was depends how long you held it, but it's like you just sell the house, because it's unlikely that you buy a house today for, let's say, $500,000, and then a year from now it dips 50%. It would take some time for that to happen. I mean, it's a huge, but it's also larger numbers. 50%. That's like crypto volatility. That's Bitcoin volatility, and the housing market in the United States is very stable.
Yeah. Especially
now because our dollar is becoming weaker. We talked about this in the last pod. The strategy of making the dollar weaker makes us more competitive on a global level, because we can get more foreign money coming in here. Aside from all of the Bill of Rights and freedoms you get from being here.
Something else you can do with, if you make $50,000 on the stock market or in crypto, is you cash out and you buy the new Daymak Spiritus electric vehicle, which mines cryptocurrency.
Let's do the song.
So Daymak Spiritus will be the world's first electric car to mine cryptocurrency, from Dogecoin to Bitcoin, while it's parked and charging. It has been engineered as the most advanced lineup of LEVs on the market and has surpassed $350 million in pre-orders in less than 60 days.
LEVs?
Yes, LEVs.
So it's one of the first LEV manufacturers to do so.
Low emission vehicles.
Low emission vehicles. Thank you very much. That is super important nowadays, actually.
Yeah. And why is this really cool? Well, it's producing mass adoption of cryptocurrencies and that whole space. But it's innovative. It's a cool niche idea, and you get to earn money while your car is parked. Granted, the amount of energy that is required to even make a substantial amount of profit is a lot larger than what this car is probably able to do. So it's probably not going to be profitable, but it's a huge flex.
And here the president of Daymak said, "The Spiritus car is for those who want more in life, and we are committed to putting our customers ahead of the curve. We envision a future where your highway tolls, your parking, and your drive-through will be paid directly with on the fly with crypto."
Yeah, I mean, if they, the thing is, there's not that many proof of stake coins out there anymore. Everything is, or sorry, not proof of stake, proof of work coins out there anymore.
The quote wasn't done. I didn't know you want to finish that.
Okay, your online bills and your banking can be handled through the same software platform paid in crypto. And whereas most vehicles are depreciating while they sit in your garage, the Nebula miner, which is what it's a technology, hardware, software that this car is using, will make you money while your Spiritus is parked. The potential applications are limitless.
Aldo Baiocchi. So you say it.
But sure, that sounds nice and all, but there aren't that many proof of work coins out there that are that popular.
Proof of work.
Proof of work. Bitcoin is proof of work. Dogecoin is proof of work. Litecoin is proof of work.
That's what gives the value of Bitcoin anyway, right? Aside from supply and demand, but that's the inherent value, the proof of work, the fact that it's effective in its ability to transact basically in a trustless system online without like double spending or things like that.
Yeah, and I mean, the main idea is that proof of work requires computer power to solve problems on the blockchain network. And as more blocks get added to the blockchain of Bitcoin or Litecoin or Dogecoin, it becomes more expensive electricity-wise to reap profits. So proof of stake was introduced where you only had to put up whatever tokens or coins you had, and they did the work for you in regards to staking. In regards of getting the rewards. So what I'm trying to say is there aren't that many POW coins out there right now that are
proof of work.
Yeah, that are really, it's all POS now. So this car trying to mine POW coins is almost pointless, because even if a coin is POW like Bitcoin or Doge, there are already massive mining facilities around the world.
I got a question for you. So if it's pointless, it's not gonna work?
It's gonna work.
How are they gonna be able to distribute the energy from the car and also mine proof of work coins? Doesn't that require massive coal mines like in China, or at least huge wind turbines?
Well, it would get the energy from the car's battery. That electricity provided by the car's battery will do the mining, but that battery isn't big compared to the giant facilities that are in charge of mining Bitcoin right now, let's say in China. So really, China's going to be solving all these problems, or the larger mining pools are going to be solving all these problems, while these cars are just going to be getting, cents to the dollar, because it's not that much power that they're offering. So, it's a cool idea. It's a good marketing tactic, but ultimately, you're not going to make that much money.
Yeah, and it's been around since 2002. They're from Toronto. I don't know. Daymak, it sounds interesting, though. I mean, hey, like, if that could happen, I mean, wouldn't you be able to just, like, hack your own Tesla and do that? Like, while you're supercharging?
Whoa, I don't know about that. I don't think so. I think you need some complicated infrastructure that's connected to your car's battery.
Let's get in. We're talking about eco-friendly. Let's get into the oil companies. Switching into renewable energy.
Sure.
That's wild. I mean, do you have anything else to say about this? Because honestly, it just sounded like it's kind of a dead cause.
Yeah, it sounds like I'm just shitting on it.
Yeah, me too, dude.
Yeah.
It just doesn't. I'm like, yeah, right.
Yeah,
but maybe that's what we should invest in. We'll look into it later. We'll probably do an analysis. Because usually when you don't think it's the right thing, it might be.
Well, hey, listen. I mean, if proof of work, becomes more efficient with, I don't know, advances in energy efficiency years down the line, then maybe it'll be worthwhile. But right now, it's just too expensive to mine proof of work coins.
With your car,
especially.
Yeah, I mean, Tesla is having trouble with some people who buy their Teslas with their chargings. If they don't charge it enough, they'll have to get towed to the nearest supercharging station. So imagine having a freaking Bitcoin mining
What an
operation.
inconvenience that
inconvenience,
is.
right? It just sounds like a front, you know?
Tesla, though, is being shorted heavy
Yes.
by Michael Berry.
Let's go.
Heavy.
I love this. Okay, so this is Cassandra at Michael Burry. He's this is what he called himself.
Who's Michael Berry, though?
Michael Burry is if you don't know, now you know, the guy who basically discovered the big 2008 financial crisis, in where he started seeing that banks were making loans for home purchases without verifying income and credit. So he looked through all the loan documents and he was able to discover that they were loans that were pieces of poo-poo, and that's what they called subprime mortgage loans. And so he was one of the first people to discover it. He didn't make the most money out of it. I know it was, and I don't know if you've all seen The Big Short. I'm sure if you watch this show, you've probably seen The Big Short.
Big Short is all about him.
He was the guy who was played by Christian Bale. He didn't make the most money out of it. The guy who was played Steve Carell, he made the most amount of money off of that trade. But hey, shout out to Michael Burry. Shout out to his family for discovering that and making a ton of money off of all these stupid banks as backs. But he says, well, my last Big Short got bigger and bigger and bigger too. Tesla, $60 billion increase in market cap today alone. 1 GM, 2 Hershey's, 3 Etsy's, 4 Domino's, 10 Vornados. Enjoy it while it lasts. And that is basically just describing all the companies that make up the market cap for Tesla. Just the increase alone, the $60 billion increase. I mean, Tesla's market cap, what is Tesla's market cap?
That's 60 billion.
601 billion. No, he's just talking about the $60 billion increase
in that day.
And this was
9 hours ago.
9 hours ago? 4 months ago.
Oh, that's a photo.
Yeah, 4 months ago, before we had the horrible March. And I mean, 4 months ago was like February.
He had a market cap, or Tesla had a market cap increase of 4 Domino equivalents.
4 Domino's,
wow, in a
3
day.
Etsy's, 2 Hershey's chocolates, and 1 GM. And these are all profitable
crazy.
companies. I mean, Etsy is pretty profitable. Right? And Vornado, I don't know what Vornado is. And he says, enjoy it while it lasts. But he took a huge short position. And this is why I think it makes sense. I think it makes sense because Tesla has projected earnings or revenues in the next 10 years that it looks great on paper. But granted, we do have a proposal from Biden for $1.7 trillion and another $6 trillion just to print, to fund programs and infrastructure and all of his grand ideas, which I'm not going to, bash on because they sound beautiful. But at the end of the day, in theory, right? But the more money you print, the weaker the dollar gets, the more competitive we are. But then the revenues and the earnings that these companies like Tesla are saying they're going to make in the future become less valuable. So $100 million today is obviously worth way more than $100 million in 30 years or 20 years or whatever, especially when you have this amount of printing and this amount of money that's going to be coming into the States to purchase products and, whatever Biden's plan is with manufacturing of products and electric cars.
Tesla's not even that profitable right now.
They're really not. So that's where I see it makes sense. But then you're probably thinking, those of you who know, Michael Burry has a lot of call options on Facebook and Google. So it's like, you're probably wondering like, oh, this guy's just like trying to hedge his bet. No, he just knows that Facebook and Google, who are profitable today, will either be more profitable in the future, accounting for inflation, or at least break even. But Tesla will not stand a chance in these industries, and especially with all of the competition that's occurring with Ford, General Motors, and, well, I mean, what happened to Neo? I think Neo's a piece of crap because it's from China. But
I haven't heard anything about Neo.
yeah, I haven't
in the
either.
longest time.
Yeah,
actually.
but either way,
Why would they
you
do
know,
it?
Tesla's a great company, but as far as its valuation is concerned, as far as the future revenue expectations relative to the price that it is today, accounting for future revenues, it is not, what Michael Burry says, and I'm definitely in accordance with that. It doesn't work with inflation.
If they're not profitable now, then they're not going to look too pretty once inflation really kicks overdrive a few months, years from now. So, yeah,
This
I mean,
is,
it's a pretty good bet. It's a pretty nice backed up bet.
Let's read the comments really quick. So I made some money on Tesla early on, and I haven't touched it since. But I'm starting to get worried it's going to drag the market down with it.
What do you mean, dude? No, it's not. The money from Tesla is just going to go to other stocks that are trying to either copy Tesla or have the same amount of potential.
This is 4 months ago, by the way. It says some boomers obviously. Didn't you see that boring ass movie where he was portrayed by Batman with a googly eye, which is Christian Bale? 4 months ago, and Tesla literally just gapped up to 850.
Wait a second. So Michael Burry started shorting Tesla 4 months ago?
Yeah, like in late January, early February, when it was hitting its highs.
But he was only able to disclose it till recently.
Right.
Okay, I see.
So, and he's been making a killing.
Yeah.
Because here, a dumbass from Wall Street Bets, what do you expect? I mean, they did well on AMC, granted, and GameStop, and Tesla just literally gapped up to 850, like trying to prove him wrong. And someone said he's not wrong, just early 4 months ago, which is true. Now we're looking 4 months later, and he was right, and I think he's going to continue to be right. And Tesla has a lot going for it. He could be wrong for the next 3-4 years, but he's right today. And we'll see what they innovate with. And right now, Elon Musk is getting hit with SEC charges for his reckless tweets. After he announced that he was going to take.
Is that finally happening? Really?
Yeah, they're investigating. I mean, he paid a $20 million fine to the SEC when he said he was going to take Tesla private when it was already public. And because you can't do that.
That happened a while ago.
It did. I believe it was like 2018.
I thought you were referring to the Bitcoin and Dogecoin tweets.
Well, that is unregulated right now.
Right.
So, I mean, he probably will get in trouble for that at some point, but not anytime soon.
It's interesting how it's unregulated and you can't get in trouble for that. Yeah, you can still put it on the company's balance sheet and have it as an asset and manipulate it yourself through just some tweets. Yeah, I'm sure that's not going to fly, and I'm sure some action is going to be taken care, something's going to happen.
Well, I mean, when the SEC sees Bitcoin as an asset class and as a security, I mean, that's only going to make Bitcoin go parabolic.
Right.
But up until that point, they don't see it that way. They see it as like not necessarily classified, like it's not owned by anybody. It's like there's like
and then you're assuming it's going to be retroactive to where you can do something about his tweets now that it is an asset class, even though what he did happened months before or years. Whenever we decide that Bitcoin is an asset class as a government.
I mean, we'll see. Nonetheless, that's my Michael Burry sense. I do see it. I mean, if you think about it, the dollar's devaluing. If expected revenue growth for Tesla, let's say expected revenue growth for Tesla, we should have looked this up earlier, but I totally forgot. So after delivering 500,000 vehicles in 2020, Tesla is expected to grow vehicle deliveries by 50-70%, and Wall Street expects Tesla to earn 78 cents per share on revenue of $10.29 billion. Let's say in 10 years. So listen, the growth rate is huge. It's like 45% a year, or so. The revenue estimates for 2022 are $65 billion, right? But if we're seeing inflation and there's concerns about inflation, I don't necessarily think Tesla's going to be up for it's not going to be competitive relative to other companies like Facebook and Google and
Ford.
Or Ford, right? Yeah,
We just
Ford.
have Joe Biden, drive the new Ford truck that's electric.
Oh gosh, yeah, he was
great.
really speeding. Anyway, that's my side. I mean, do you have anything to add about that? I just thought that was an interesting concept that you all should kind of think about when you're looking at revenue growth and also considering inflation.
Well, you can also talk about how it is the leading company in electric vehicle manufacturing. It's been around, it has that brand name, that appeal. And in a spot where oil companies are going to be, they're struggling to stay afloat. Chevron is struggling to stay afloat. These oil companies are ultimately going to have to switch. They're going to have to pivot to more renewable energy sources and completely shift their whole, product, service, business model, whatever. That's going to make them lose investors because their investors, they are in there for the oil. Where are these investors going to go? Probably Tesla, right? Or other EV manufacturing companies or other renewable energy companies, because
Well, if they're in oil, it might be like Ford.
yeah,
Right?
Ford. That's a good point.
Depends how old they are, but because they're probably getting pissed off by Elon's, Dogecoin stuff and childish demeanor.
It's very childish. So yeah, I mean that's something to consider as well. Like, where is the money from these oil companies going to move to next? Because even if these oil companies were to transition, it's going to take some time for them to actually be profitable. Switching over to, all the equipment they need to become renewable energy based is going to be expensive. The margins aren't as high. So their profits are going to take a hit. And people are also going to have to gain confidence in investing in them again as a renewable company. So Chevron, let's say Chevron is, they're an oil company now, they're big in oil, and they decide to pivot to renewable energy. Me as an investor, let's say I love oil, I leave, and then Peter, someone who's into renewable energy, he's not just going to go nosedive into Chevron. He's going to have to wait a good amount of time for Chevron to front and prove themselves. And that is going to take a while. It's going to take a long time because you're basically rebranding a company that's been around for decades. So there is going to be a period, or at least that's what I'm speculating, where they're going to be at a huge loss or not making as much profits until that confidence and trust is gained as a new renewable energy company. And yeah. But in the meantime, that money's probably going to flow into companies like Tesla or Neo.
I mean, what are they gonna do? I mean, they might like just buy land and put solar farms and wind farms. But realistically, with all the money they have a bunch of cash. They're just probably gonna invest in other companies that are doing that and get a piece of their profits, like private equity companies.
It's just a matter of that can sustain them as they go on.
I think it would. I mean, if they're putting big money into companies that are doing the best, hiring the best and eco-friendly environments, or eco-friendly renewable resource ecosystem services, etc., and helping the growth of non-combustible engines and electric vehicles and manufacturing, then it's they're gonna do good. And they have a ton of cash.
Or maybe they can just pivot into an entirely new space, like renewable cryptocurrency mining. That's an avenue.
I think they're too old for that. But maybe one of the kids, the successors, will come in.
One of the interns.
One of the interns, right? Anyway, last thing, not least, just want to mention that China, okay? China, for the longest time, has been trying to lower their kids population count because they're literally the largest population in the world, right? So on Monday, China said it would allow married couples to have 3 children, ending the 2-child policy that has failed to raise the country's declining birth rates and avert demographic crisis. And what do they mean by demographic crisis? This means that, and this is, I believe the UN said, and also demographic scientists, demographers, I believe that's what you call them, they've mentioned that by the mid 21st century, the amount of age-ready men to marry and the amount of age-ready women to marry, the disparity will be 1 million people, meaning there will be 1 million more men who are ready to marry and 1 million less girls in China.
This is just in China. Okay.
Ready to marry. Right, yeah, just in China. Because China, for the longest time, when they had the 2-child policy, they even had a 1-child policy. You know, their culture really is more about the male taking down the last name, you know, prioritizing males, and really they would have periods of time. I mean, I know someone, you know, the Christies, they're my really good friends of mine. I call it one of our each other cousins and things like that. She's like my aunt. They adopted a Chinese girl about, I don't know, 6, 7, maybe probably 8 years ago, and who was found in a dumpster. And it, you know, the amount of you know, because at the same time the Chinese government was very much opposed to you know, the birth rate, because it was so high. They would need to lower their population. Resources were becoming scarce. But ever since they did do the 2-child policy, before it was like a 1-child policy in the 80s, it really, you know, people started emphasizing and prioritizing male births rather than female births. And so now in the middle of the 21st century, there's an expectation that there will be a disparity of 1 million more men than women. And China's doing a lot of programs right now to bring women in to the country. But, you know, this has a lot to do. Population growth and birth rates and death rates have a big correlation with the environment and also the economic ability of a country. So a country that's developing has a greater chance of prosperity and economic growth when the population growth is limited and deterred. But when you're dealing with developing countries, you have a high fertility rate amongst women, which is called total fertility rate amongst the lifespan of a woman. And you also have high mortality rates amongst children, which is just a vicious cycle of women want to have more children, the deaths are higher, but that has a lot to do with the healthcare systems, the political systems, also the education of women. So around the world, you know, we don't know this really much in the United States, but around the world, the socioeconomic standpoint of a woman is much lower than a male's. And that basically just makes a woman go to not necessarily want to get educated or get pregnant very young, and ultimately just not seek any form of growth other than just tending for children. And then what that happens is that you create more people in a population, especially in a developing population where resources are scarce. And also more people are driving cars, working in manufacturing facilities that are inefficient, and it just creates pollution. So if you look at countries like India and China, there's dust domes and pollution and smog all over their urban cities. And you're seeing a lot of urbanization from rural areas, you know, farmers and things like that, of young people move to urban areas in developing countries, much more than developed countries like the United States, but still using these very much non-renewable resources. because a lack of education, the cost, I mean, we're not even up to scale with renewable resources. I mean, we're still developing that.
What I think is interesting is that China has a 1.4 billion human population.
Yeah.
And now they're allowing...
Wait, 1.4 billion?
Yeah.
We're at like, what, 400 million in the U.S.?
400... We're at 328 million.
328, it's probably 340, but, yeah.
And there is about 8 billion humans in the world. So they have a good, good fraction of humans. And I think introducing, a third child or allowing that, raising that restriction is good. I think it'd also be good for, the company Tencent, publicly traded, who owns WeChat. Why? Because it means more people are going to use WeChat, which is highly run by the Chinese Communist Party government. And WeChat is very profitable, whether it's through their red envelopes where, family members send cash to each other, or whether it's through just regular peer-to-peer payments. So I think, Tencent might be a good company long-term to throw your money at.
But Tencent's Chinese.
But Tencent is Chinese, so...
But ARK Invest is investing in them a lot.
Oh, really?
Yeah.
That makes sense.
ARK Invest is in Tencent. But hey, maybe Tencent is one of the exceptions. They're like a venture capital firm. But nonetheless, China and other developing nations would do better if they slowed population growth, which is what we consider R. What R is birth rate minus death rate of a population. And then you can also add the immigration and emigration, but let's just say birth rate and death rate. Now, in a place like Japan, you have a very high population of older people and a very low population of younger people. And that creates a problem because older people require more benefits. They can't work as efficiently. And the younger generation has to basically pay more in taxes to fund the benefits, like say whatever Social Security is in China, or I'm sorry, Japan. And then you're basically at a stagnation. So you kind of want to have a balance of like zero birth rate equaling death rates. Ideally, at least right now in this point, but there's an expectation that within the next 100 years, we're going to start slowing down that 7.9 billion. And at least in the next 100 years, it's going to be like an S curve. Right now, we're in exponential growth because of food supply, agricultural developments, medicine developments, etc. But eventually we will be able to consolidate, like you said, for like what Bitcoin should be doing.
And then if we live forever, there's opportunity there. So.
Well, I'm Peter.
And I'm Eliu.
And thank you for listening to Pineapple Chunks. It's an absolute pleasure to be here with you all. And don't forget to like the podcast, leave a comment. It helps a lot for the hard to reach guests on Apple Podcasts. Like the video if you've stayed here this long. We're going to clip this, but what's going to the moon?
What's going to the moon?
Yeah.
I'm still hard on ApeSwap.
ApeSwap, banana coin.